Alright, so I wanted to go over on why TJR lost this trade right here. Obviously, we all know he's a good trader. He inspired me. I took what I had to take from his courses. I didn't take everything. I don't trade no fair value gaps or anything like that. But like the breakup structure, the order blocks, all that. The rest of the stuff I did take into consideration in my trading. But we're gonna look on why he lost this trade right here. So first of all, I wanted to say I thought it's okay for strategies to change and whatnot. I'm pretty sure. Don't quote me on it though, but TJR was like, "Oh, stay off the 1 minute chart and whatnot." But here we are on the 1 minute chart. So overall, if we go to the 30-minute chart, he's usually like, "Oh, go through um all the charts, or I'm at all the higher time frames to make sure you have a bias." Which, in my opinion, you should never have a bias. I think, um, the day just bounces. Like, if that makes sense, like it just bounces around. Like you're not gonna catch just one huge trade every single day. So it's better to take the small hits. So right off the bat, we can see that it was on the 14th. He was like, "Oh, I lost $97,000." All right, so obviously, in my opinion, I would have been okay. So I'm gonna wait for price to come into here, into the supply candle right here. Why? Because right off the bat, we broke through all of these doji candles. So it sort of like makes it to where when price gets up here, now it knows where to go, and that's down. Because doji candles, they're sideways candles, which means that basically, it's basically a balance between buyers and sellers. So it's really no direction. But after price comes here, there's an obvious direction, if that makes sense. But you see on 30-minute, we obviously have this large supply right here. Okay, so TGR wanted to. Alright, so this is a 1 minute chart. He wanted to cause up to these highs right here on the 1 minute chart, which would have been up to here. But guess what? That's not a bad trade, to be honest. But here's why his entry wasn't as good though. Alright, let's go to the 5 minute chart. And you can have the best trade in the world, but if your entry isn't good, the trade overall sucks. Alright, so right off the bat, I see a lot of demand at the bottom right here. You can mark it off right here. There's a lot of demand right here on the 5 minute chart. Right here, I can see why he would have got in right there. I think that's where he got in. But I do gotta say, his. I mean, I get he has a lot of money, but the money he's risking is so much money, and that's why he's losing big days and risking so much. And then once he loses a lot. But he does make a lot of money some days in some cases. But here's where did he get in at? He got in like at 10 something. His entry, in my opinion, was terrible. For instance, if he wanted to actually get in, what he should have done is waited for obviously a breakup structure and then a retracement up until this demand zone right here, wherever we bounced off before, which in my opinion would have been somewhere like here and then here. That way, if he did lose, and this is the trade I think I for sure would have taken this. I would have waited for it to wick out and then come back 50% and then target this supply up here. And then risk, wherever the demand was, maybe a little bit lower than that. But for why he took that trade here is crazy to me, because this is how I would mark out my charts. This level right here, we used it to bounce, but then it turned into supply as soon as we kept rejecting. And if it happens 3 times in a row, most likely we're about to take a dump. Market movers, they know they have orders up here. They know, but they want to get out all retail traders and all that stuff, And so they formed this little chop area, right? So they can set their stop loss under wherever we close the lowest point, the wicks, whatever. And then they use the 5-minute chart up here for an actual zone where we can actually bounce, which is here, and yeah. The thing is, like, I think I would have lost this trade too, in my opinion, if I would have set my stop loss. I would have gotten into here, waited for the bounce. Technically, I would have made money here, but why would I target all the way up here, knowing there's so much supply up here, so much sell-off, when all he had to do is target here? Because also this is a break of structure, a simple retracement, break of structure and retracement, not even using supply or demand. It's just simple. Like, it's just the fact that he's risking so much. It's basically, where is it? This is, like, it's crazy to me. He's using that much risk when, he can keep it slow and steady, And if you really did want to take that trade, wait for the demand, or for it to bounce off this level right here, which we've used once, twice, 3 times. And look at here, bounce from here, it went all the way up here. Bounce from here, went all the way up here. And guess what? Bounce from here and went all the way up here. So all he had to do was be a little bit more patient, and he would have got the trade and actually made money. Not to say he's a bad trader. We all have bad days. I'm just explaining where it would have been better to get in at. But obviously, we're looking at things the wrong way as well. Or not the wrong way. It's just like, you gotta look at it at another perspective as well. What he could have also done, which in my opinion was 100% a better trade, since he's risking so much money anyways, was come up to here, look at the supply. He could have got in, risked this much, and then took it to the downside at a safe level where we know it bounces. So before, we already came down here, so what, it's highly likely when it dumps, it wants to wake people out, and clear their orders and whatever, blah blah blah. The risk reward would have been a 4.6. This right here might be that, but look where his profit target is at. Unless it's this one right here. Like, it's well over it as well. Like it's better to go with the trend than change the trend. The trend's already trending either way. So if you're wrong, you're gonna be wrong. You're gonna lose a lot of money. So it's might as well look at it, and you can see right here, in higher time frame, whenever we have big moves, we can expect to chop on 30-minute time frames, even on hourly sometimes. Just chop after a big move as well. But I think there's 2 reasons as to why. I think it was just those reasons why he, lost as much money. The trade wasn't bad. It's just, his entry could have been better. Because when you have a better entry, what that means is your risk to reward is going to be better. And why is that? For instance, if you would have waited for the price to come down here, and he would just, put a little risk, however much money, maybe, where is there? It just would have been an overall better trade. Or, no, my bad, right here. Wherever he got in, if he would have put risk down to here, and he would have just looked at it at a higher time frame and put his risk wherever we bounced at before, it would have been stopped out, yes, but his entries just would have been better. His entry, like, he would have gotten somewhere, somewhere down here, somewhere here. Yes, he would have got wicked out, but he wouldn't have lost as much money. And then, if your entry is better, right, but you have to take profit at key levels, not levels that we haven't, reached yet. That's what runners are for, Maybe that's what he does. I don't know. I haven't watched his content in a minute. But it wasn't a bad trade. It was just bad execution. Just better entry. That's basically it. On the 1 minute chart, you just see we got a big move. Now we're gonna chop like I said it usually does, and then it wicks people out, and then market movers, they take it up to a key demand or supply level, on most likely on a higher time frame. Usually I use the 30-minute, maybe 5 minutes if I want to be in and out. And then right here, we use this supply candle. You can see how long it is. Pause. And then it uses it to bounce again, and that's when it actually moves down. It's all about key levels, about getting in important levels where people want to buy, people want to sell. This is just, where did he even get in? Like, because I'm pretty sure he marked it right here, which is like, I would have waited for it to come down to here. Okay, wait. He didn't get in here because he's using this one as stop loss. So he might have got in somewhere over here, if I can see where.
Cut off your balls, Boogie.
Okay, so I guess he got in somewhere here. Yeah, it still would have been better entry, would have been down here. You get that breakup structure, retracement to demand level, and then bounce. But, that's why he lost that trade. It's not even about losing the trade. It's just he shouldn't have lost that much money,